Hi, Julien. It's nice to see you. Well, as we wrap on the first quarter, one notable theme has been the significant return dispersion across geographies. What has been driving this, and do you think this is something that will play out for the rest of the year?
Hi, Christina. Year to date, both the S&P 500 and the Nasdaq are in negative territory. In Europe, the DAX, the Euro stocks are up double digits. And in Asia, the Hong Kong index is up almost 20%. Beyond the noise around tariff, the market might be sensing some more fundamental changes at play, and that's a divergence in fiscal policies across regions. The US has experienced a decade of strong economic growth, strong corporate profit growth, and strong stock market performance. But during that period, the US economy was supported by large fiscal deficit, averaging 5% of GDP. This is changing. The Trump administration has clearly stated its willingness to reduce the fiscal deficit, what Scott Bessent described as a detox period. And if that fiscal tide is coming out, that would be a negative for both US consumers and US corporations. The opposite is happening in Europe and in China. In Germany, after years of strict fiscal discipline, the new chancellor has announced a large fiscal stimulus, which could amount to over $1 trillion. In China, the government also recently announced a new stimulus package to boost domestic consumption and bolster the economy. The stock market being forward-looking, it has started to reprice those diverging fiscal outlook between the US, Europe, and China. So for the spread in stock market performance to persist, we need to see how those fiscal deficit will translate into surpluses for the private sector and how they will ultimately impact corporate profit in each of those regions.
Now, has the volatility created buying opportunities? Can you speak to how you're managing the portfolios throughout all of this?
We are bottom-up fundamental stock pickers. All our portfolios are built one stock at a time, not dictated by top-down outlook. And with the recent stock market volatility and dispersion across sectors and geographies, we found some attractive opportunities. Let me give you a few examples. In Korea, we've added to our semiconductor exposure. In Hong Kong, we've initiated a dominant Pan-Asian life insurance company. In the US, we found value in cable, in retail, in logistics, and in healthcare. Finally, we've also slightly adjusted our gold exposure across our portfolio following the strong performance of gold year to date. It's a great time to be a truly active global investors and to take advantage of the valuation discrepancies across the globe to build resilient and diversified portfolio that compounds over time.
Thanks, Julien. As always, it was great to see you.